Host of RealAg Radio on Rural Radio 147, as well as founder of RealAgriculture.com. I hope you're enjoying all of our coverage here as we head a little bit closer into spring. Some people hitting the field now in parts of Canada. I know around me in southern Alberta here, there's people out putting seed in the ground. I talked to some farmers today for the Farmer Rapid Fire for RealAg Radio, and there's some few in Saskatchewan, people looking at the forecast in Ontario and thinking about it. It's that time of the year. It feels like spring a little bit, at least more so than 2 weeks ago. And this is time when people get a pretty eager and high anticipation of what's ahead for the 2020 growing season. Hopefully, there's some things that work out better than they have the last several years. But every year is a new year, and you got to be positive for sure. Okay, let's get started with our RealAg Live. We're talking markets today. Let's get going. This is RealAg Live. Okay, today's guest is John Driedger of LeftField Commodity Research based out of Winnipeg. Hey, John, how's it going?
I'm doing fine, thanks, Sean. How are you?
Good. Where are you? Are you stowed away at a cabin somewhere in the woods, or what's going on there?
Yeah, we got a loft at a barn that we built, and so it's a place where I can hide and escape from the kids, who I'm sure everybody who's got kids at home are probably driving them a little crazy. Now the weather's a little nicer, so it helps everybody can spread out a little bit, but everybody's kind of cooped up. And had a call with a client last week, and I think the comment he made is that the biggest threat to his kids at this stage of the game was him and not the coronavirus. And I think maybe all of us probably on a few days would feel that way. So I do have a little place where I can squirrel away, so I've appreciated that. Yeah,
absolutely, for sure. It's interesting. The weather has turned, and I know in my neighborhood here, it's like you can tell the afternoon kids aren't doing schoolwork. The streets are just flooded with kids as they try. Yeah. The parents are just like, I gotta do some work. Get out of my house. You may see some of my teenagers run behind me here at some point. Okay, John. I know obviously the markets are your business. Following things very, very closely. We've seen the last month of, even if you look at the year-to-date charts. If you look at the charts of lean hogs or live cattle or class 3 milk, you can't tell which chart is which because they're just like this. The grains, though, have been a bit of a different story in some of the areas, but we can't go very far without talking about corn. Corn really is one of the commodities that it's too bad it leads the market because it is a real struggle ahead of it.
Certainly that's kind of almost in some way. You're right. So from a grain complex, the grains have actually held up fairly well, and in some specific cases, they've actually traded quite strongly. And even if you step outside futures markets, there's some individual markets that have looked really, really good. Corn, of course, that's not the case, and I mean it makes sense when up to about 40% of U.S. corn goes into the ethanol business, and you see gasoline consumption down 65-70% in a lot of states. That's just an enormous demand hit, and so we see corn trade down to just flirted with that $3 level here a couple days ago, which is kind of a multi-year support level. And we've sort of bounced off that, but it's been that's the one certainly it's been brutalized and rightfully so. And of course, not just the ethanol side. I mean, as you mentioned, the livestock sector has just been hammered, and there's nothing good for corn on that side either. So it really has been bearish from all fronts for that particular crop.
I'll mention if you do have a question for John, please enter it into the comment box, whether you're watching on Twitter, YouTube, or Facebook. We'll get to as many as we can here. John, I think a lot of people looked at crude oil and they're like, oh my goodness, it went negative. That's what's going to happen in corn. Like you said, $3 seems to be a little bit of that base, that resistance that people are looking at. I've seen a few analysts saying, and we could trade into the 290 range. But at least it feels like we're establishing what a bottom could look like. Is that fair?
Yeah, no, I think that's fair, and so I kind of again, could it trade below 3? I suppose it perhaps could. It's pretty hard to paint any optimistic picture for corn, but you're right. It sort of feels like there's an element of trying to find some stability. Now, there's a big difference between finding stability and being bullish or thinking there's a whole lot of optimism. But I think there's a little element of sort of trying to grope around for a little bit of a bottom. And so for example, the price spread between corn and wheat has gotten really wide. So, around the margins, you start losing some of that wheat feeding. You're feeding a little more corn. Is that, enough to turn the ship? Not necessarily, but are those the sorts of things that markets do to try and grope for a bit of a bottom? I wonder if that's the type of thing we're starting to find a little bit. Farmers not selling, again, is that bullish? No, the supplies are still there. Does it help you find that bottom? I think maybe that's what we're starting to see here a little bit, at least for now.
I would think that the hope at this point is, I've heard a few growers talk about a weather market. My opinion is that 2019 we killed the corn weather market for a long time. Who is going to believe in supply shortages after what the adversity that happened last year and what yields we ended up with in the Midwest? It just doesn't seem feasible to me. Is the opportunity for more of a positive story, though? How much corn and ethanol will China have to buy in 2020?
I guess maybe, but I'm not sure. Again, I don't think that's going to replace what the damage has been done on the ethanol side. And the one thing, and again, I guess it maybe depends a little bit on how. If we're going to see any kind of a V-shaped recovery, for example, and I personally, I don't believe that's going to be the case. I mean, certainly we might bounce off of the bottoms when you think about gasoline consumption. But if people sort of think that, we're sort of, maybe the worst is almost behind us, but I think the economic ripple effects are going to be a lot more long lasting. So we might see some recovery. We'll see some recovery as people just get out of the house again. But that's going to be a far cry from just snapping your fingers and things being back to where they were. So I think just the demand impairment in all these other places is going to be pretty long lasting. And in the case of for example China, you look potentially some export volumes and crops, maybe some concerns in South America. Ukraine will be down a little bit. There'll still be sizable crops, so it's not like suddenly we can just shovel all this corn into China and fix the problem. So, those are the sorts of things, again, where maybe you sort of find that, some stability, maybe bouncing around at a bit of a lower range, but hard to really turn the ship, I think, in a major way where you can get excited about prices.
If you have a question, make sure you get it in by asking it in the comment box, whether you're watching on Twitter, YouTube, or Facebook. We've got a question here from Viren. He is in Ontario. He asks, is there a commodity that will do the least worst through this pandemic?
Well, one of the so there's a couple that pop into mind, and certainly, some of the pulses and special crops are actually ones that have held. So the non-futures traded crops, first of all, held up better, I think, even sort of in the depths of the uncertainty. And that's, where just a little more of a pure fundamental market in those cases. Two parts. One is you don't have that speculative selling and liquidation. The other part is, there's just a genuinely, people buying stuff to, whether internationally or just in our own backyards, people buying some of these crops and food just to fill their groceries. And so, those held up relatively better. And I think some of the pulses in those crops actually have a pretty good outlook. The other market that we are watching, which has been really volatile, is wheat prices. And, certainly, has been but you could make a case where wheat should hold up say less bad is the way the question was framed, and that's probably a fair way of looking at it, with maybe potentially an even better story with maybe the next 6 weeks or so of weather really being the driver for that. So wheat is one that that potentially is a more interesting story unfolding. We're kind of in a bit of a weather market there overseas, more so than here, and that's something we're watching.
But it does feel like pulse crops have been the one that have sort of avoided all of this, which kind of makes sense, where maybe people concerned about protein supply, and so there's some domestic demand. Maybe, I guess I'm kind of speculating there, but the exports have probably led the charge higher there for some of the pulse crops.
Yeah, and it sort of ignited a little bit maybe what was already sort of unfolding, sort of underneath the surface all year. We'd having pretty good exports for pulses, and it was sort of a positive story percolating underneath, and then you sort of get a little bit of an extra demand shock in terms of a bit of a pull, a little more urgency to get some coverage, and it sort of just helped ignite that thing a little bit. So it sort of, how would say, sort of put a bit of an exclamation mark on what was happening already anyway, and then we've seen some pretty good prices for pulses, but certainly the current environment has helped encourage that.
Yeah. Hey, question from Brian, who is recently transplanted to Ontario, Brian Voth. With less ethanol production and DDGs into the feed market, how much could corn use for feed go up?
Yeah, I think that's a good question. I think certainly, and that's one of the things we think about, ethanol. It's not sort of zero sum, I guess, if you will, right? Because certainly, a lot of that corn goes back in as DDGs. I think the bump might be a little more incremental, would be my thoughts. Certainly it's probably maybe almost more bullish for something like, on the protein side, say soybean meal and that sort of thing, more so than corn per se. And then, of course, there's also just simply, the fact that, what is livestock consumption going to look like in the aftermath of all this as, just what's been happening, particularly in the hog industry, and I guess in the U.S. Herds likely smaller on dairy and so forth. So we're going to probably just see less feeding overall on the backside of this. So maybe there's a bit of an offsetting effect in some ways, rather than it having a positive consumption bump, if you will. So, and I know, Sean, you talk to a lot of livestock feeders. You probably have a bit of a sense of what they're doing practically on the ground level, but that'll be my thoughts on that.
Well, and more talk about, going with maintenance rations. That probably means a back off of feed demand and, more terms of more forage being fed to them to kind of, delay this out a little bit. I'd written a story, it's got to be about a month ago now, about, will we be short of DDG supplies going forward? What would happen there? And, most of the research I did is once DDG prices get to a certain point and there's that relationship between barley and DDGs really separates, feedlots just walk away from DDGs and they move on to other sources. And your meal example might be a good one. Sure.
Well, and I think also we've been, as we track some of the DDG prices, we track, prices went screaming higher initially, and now they've sort of backed off. And again, it's probably a function of, in the short term, it's hard to just change overnight. But when the price signals are there over the course of a week, a couple of weeks or something like that, a month, people adjust, and now you see those prices come back as people are using other products.
Okay, Lindsay has a question. We've established that corn stinks. Which has more upside, wheat or barley?
I would probably say wheat has the potential more upside. Barley, for a couple of reasons. One is, I think we're going to see, maybe a little bit of a bump in acres in barley, but, at least on the feed side for sure. Barley is pretty substitutable. And so, whether it's corn, whether it's feed wheat, whether it's something else, they'll use whatever the cheapest product is by and large. On the malt side, that's a pretty small component of what we grow from an overall barley perspective. So if any kind of a reasonable harvest, not a lot of reason to get excited on the malt side. In terms of wheat, and again, this is one that I think a story is unfolding, so it's not written yet. But, a lot of dryness in Northern Europe, watching that Black Sea crop, and some dryness over there. And that's where I think potentially, and again, all it takes is a couple of weeks of good weather and suddenly that changes. But there's potentially a bit of a weather story unfolding there, which has been showing up maybe more so in global prices, definitely more so global price in Minneapolis. I mean, Minneapolis futures have been terrible, but some of the global markets have been stronger. So that's where there's maybe some potential, but again, that's weather that's unfolding. So that story's not written yet.
Would you, in a year like this, we talked about ethanol and how much it's struggling, would you grow a general purpose wheat intending to sell it to the ethanol market?
Well, I think it's one of those where you probably got to think about it as, I wouldn't be growing it with the idea that you're going to get a big rebound or a sexy price. I think you probably look at, what is, call it 450-ish or something like that, 4.25, 450 is sort of maybe a reasonable sort of a floor type of a feed wheat value. And if you can yield your way to a reasonable return, maybe it's not a bad option on your farm. That's going to look different on every farm, right? Depending on what your reasonable, yield expectations are, what's your feed opportunities in your own backyard. Southern Alberta, Southern Manitoba have lots of local feed demand. There's other parts of the prairies that don't have that. But I would grow it on the assumption that you're going to have probably a lower end feed wheat price. And if it makes sense, then maybe it makes sense. But I wouldn't grow it thinking that there's a whole ton of upside and we're just around the corner of a big corn rebound or anything like that.
A sexy price. Do you have like a certain sexy price for each commodity, or
anything that makes lots of money? Certainly, we're not seeing it today in a lot of these crops. Some crops we are.
I know this. The lean hog future is not a sexy price.
No, that's unfortunate. Hey, it's that's tough. Just in percentage terms, you look at what that chart has done, and if anyone's sort of feeling like they're licking their wounds on the grain markets, and in some cases, certainly we've had some disappointing prices. Boy, you look at that percentage drop in lean hog futures. That's something else.
Well, I said it at the beginning of the broadcast that if you look at Class 3 milk, lean hogs, or live cattle, and you took away the name of the chart, they all look the same.
Yep.
Terrible. And
Yep.
it's and I think it's one of those discussions about sentiment, right? I actually had Brian Voth as a guest on RealAg Radio a number of weeks ago where we talked about it's easy to get trapped in the this is bad, but you got to look at, okay, what is my game plan? Where are the opportunities to make some good decisions from a risk management standpoint? You look at oil 2 days ago. It's like it's zero. It's up like 50% off the lows now, right? So there is opportunity sometimes when markets feel like they're going the wrong direction on you.
Yeah, no, there's definitely some truth to that, and I think it's one of those, where obviously after the fact is too late, but it's one of those, even just from an overall general business perspective, if you can build some resiliency in your business, and by that sense have the ability, I often with these really poor prices and really poor markets, often time can be your best friend if you have the ability to hold off on prices, and that's not closing your eyes blindly hoping for some fantasy rally that's not going to happen, but avoiding having to force something out the door in the heat of the moment, having the ability to store grain, maybe capture some carry in the market, wait for that bounce, and maybe it doesn't get back to the price that it was or you hope for, but certainly you don't have to shovel it out the doors at the lows. Those sorts of things, it can go a long way, but that's probably more a function of business resiliency than, being some super cunning, insightful, I can day trade this market and figure out which day it's going to twist and turn. It's more of I think just the broader ability to avoid having to make sales in the worst of it goes a long way.
Yeah, and I think canola is an example here, right? So we hear the news, China not buying canola seed, and your partner Chuck Penner at LeftField mentioned this, I remember last August, because I took some heated emails from growers when Chuck said, canola's not that bad. Like it's okay, and people were flipping out at the time saying, what do you mean it's not bad? China's not buying. We can get lost in the news sometimes and not look at not talk to the elevator and find out what some of the cash bids are, because they might be better than we think they are. So, hey, John, here's a question from Michael Ferguson on the Canadian dollar, which I think is one of the most interesting market discussions right now. How long can the Canadian dollar hold at these levels given what has happened to crude oil?
Yeah, that's a good question. I do think, and one of the things with these broader financial markets, and I'm not a currency expert, but one of these broader financial markets, just tremendous volatility. And so, you are going to have, so I guess I should back up half a step and say I'm certainly not bullish, the Canadian dollar. I think that probably, just from an overall perspective, we're probably going to run much larger federal deficits for much longer than anyone's expecting. That's not good for the Canadian dollar. I think even prior to all this, I don't know that as a country we were necessarily setting ourselves up as, we're a big magnet for capital, where taxes are going up, we're having, issues of regulation, we can't get our own house in order. So we weren't exactly a magnet for capital before, and I think it's only worse now. So none of that lends itself to a strong currency in general. So that probably, so we'd probably had a bias towards at least a flat to weaker dollar coming into this. And of course now, crude oil has been decimated. So I think there's probably some downside. However, there's a certain element sometimes of these things of being a little bit self-correcting as well. And so some of the extreme forecasts of the downside 60 cents or something like that is probably too negative. So, we probably end up weakening a little bit. We're probably in a bit of a counter trend rally here would be my thought, as some of the energy sentiment sort of pulls itself off the lows a little bit and so forth. But that's more, I think, day to day. I think probably some weakness in the Canadian dollar, but probably not this catastrophic collapse that some of the real doomsayers sometimes maybe are forecasting as well.
Okay, but more likely we're at 65 than we are back at 75?
I would support. I would believe that. Yeah, I think we see 65 before 75. That would be my best guess.
Yeah, like it just, to me, you look at some of the trading that has happened. You just look at what happened to oil. Sentiment goes one way, and it's just like this. It's just like this avalanche of momentum. It can work. The programmatic traders. It can work for you on the upside, which we celebrate. We're like, yay, rallies. Yeah. And when it works to the downside, we don't like it so much, especially if we are long inventory. I just don't know how the Canadian dollar. I'm more the person that is in the 60s. I think we've got a long tail recovery here. This is, like, I agree with you, not a V-shaped recovery. This is something that is going to take a while. We don't even know how we address a possible second or third wave and how we deal with COVID long term before there is a vaccine. If we have to go into a shelter in place or social distancing on the second wave in the fall, boy, we need to be really angry at ourselves that we didn't have a better plan. But the Canadian economy here has got some massive struggles, and maybe because I live in Alberta, I'm a little bit more negative on it. But boy, it doesn't feel very good to me.
No, I agree, and it's probably a mid to upper 60s would probably be my guess is where we probably end up spending quite a bit of time. I think 60 or lower, that's probably too pessimistic, but I think more downside than upside would be my guess.
Okay, so we talked about corn and the negativity that is there. We know that likely the USDA prediction of 97 million acres is probably a bit to the long side. Based on what a lot of analysts are believing. Seed companies are saying that growers are switching out of corn into beans. What does this mean for soybeans? What's your outlook right now for soybeans?
Yeah, I think probably, in our opinion, it's probably kind of a range bound. I think with the soybeans, and there too, I think it's hard to get really bullish at this stage of the game without a real, without a real weather problem. I mean, South America, some of the crop estimates are coming down a little bit, but they're still going to harvest a big crop. I think China estimated that their soybean imports were going to be up, I think 4% this coming year, something like that. That might be a bit optimistic. They're still battling with African swine fever. They got they had printed a negative GDP for the first time since they've been keeping records here this last quarter. Are they going to see that kind of a rebound? U.S. carryout numbers kind of are down year over year, but they went up last report, which is no surprise. As much as, I guess, at the same time, maybe there is some, let's call it some value there when we start pushing down to the lower 8, pushing $8, maybe that's pretty good support. But, I wonder if we don't end up spending time just kind of making time in a range, in soybeans would be my guess. And, so from a marketing perspective, when you get to the upper end of that range, and especially if you can sell into the carry, capture some carry, which bleeds away over time, maybe that's a way to play soybeans from a farmer perspective. I'm not sure that there's a whole raging bull. You ebb and flow, take advantage of the bumps, sell into some carry, capture that carry, and maybe that's how you do it in the soybeans, unless weather tells you something different. But I'm not sure that that's in the cards.
Yeah, so here's one of the, I look at the 5-year November soybean chart. We're at what, 848 today. We're close to those. We're definitely at the lower end of the 5-year range for sure. We have been seeing I think some of the export sales numbers came out today on soybeans to China. There's some positive news there, John. I think a lot of with that phase 1 China deal, growers are really, really hoping that China will live up to those commitments. All we need is China to really rocket here on purchases. The trouble is that these commodities like soybeans have come off so far in prices. It's not a quantity number in the phase 1 deal. It's a dollar value, which means they got to buy even more units to make it.
Yeah, well, I guess, and that depends, in terms of what your expectations are and them actually fulfilling it, honoring it, and that sort of thing. I guess I'm a little bit more of a skeptic in that regard in terms of whether the spirit of the deal and all the feel good stuff around it is going to be, unfold the way it was meant to at the time. I think that I guess I'm a bit of a skeptic in that regard, somewhere along the line. Maybe if that's what you're pinning your hopes on, I think you're setting yourself up for disappointment. Now, I might be wrong, and I guess I will say, with the thing with soybeans that makes it a little bit of a challenge is it really is a political animal, in so many ways. And so it's not even, in that regard, I guess you're trying to handicap not just fundamentals, but, politics and not just politics in general, but between China and the U.S., which is even more complicated on all kinds of levels. So it is a bit of a, the political aspect is more challenging, but I wonder if you don't set yourself up for disappointment if China purchases is what you're banking your bullish hope on.
I got a text from Dirk who wants to know, do we need to be concerned about canola exports to Europe, considering that biodiesel production will be down? Yeah,
that's a fair question. They certainly have been one of the bright spots this year, and they've helped fill at least a portion of that shortfall of sales to China. Certainly by no means all of it, but that certainly helped. That is a bit of a concern, and that's something we want to do a little more digging into ourselves in terms of trying to quantify that a little bit. And again, the big question is how long is this going to last, and how deep are the consumption cuts and so forth. But that is something that probably even more so maybe than the tail end of this year, does that spill over into next year? And so that's something that I think that would be. So I guess I would say we have a pretty reasonable outlook for canola. Bullish might be a bit of a strong term, but we feel okay about the canola price. But certainly of the areas where there's maybe some vulnerability, exports to Europe would be one that we're a little cautious about. Now, I mean, they do have, their own rapeseed crop has come under some stress here. Their production will be down a little bit. Ukraine's production is going to be down a little bit. And so globally, it's not that canola and rapeseed is heavy, but, so maybe there's a bit of offsetting. But that certainly is an area of vulnerability for sure that we're watching.
Well, we know China is opportunistic. Do we see China lifting those export restrictions on Viterra and Richardson's and getting back to normal business here in 2020?
I'm not optimistic. To be honest with you, I'm not that optimistic. I think there's too much political importance on their decision, I think, to do that, barring us, making, I guess, the correct political moves in their eyes, if you will. So, okay. And I might be wrong. I hope I'm wrong.
I hope you're wrong.
But our base scenario is that's not going to change anytime soon. If it is, obviously that's a bullish surprise. There's no question about that. And you're right, they are opportunistic. So at a certain point, they might take advantage of that, and which would be glorious. But okay. I'm not banking on it. I'm not assuming it. And as we think about our plan for canola, we're not expecting that. Although in the back of our minds, realizing it's a possibility.
Okay. And hey, we're almost out of time here, but the crop that is going to make prairie growers rich, oats. What's happening?
Well, old crop price has been pretty good. They've had a pretty good run here. We ran into some seasonal tightness at this time of year, which helps, and commercial stocks have been drawn down a little bit, which helps. The problem with oats for new crop, we're going to plant too many acres. So if we get any kind of a yield and reasonable quality, there's just too many oats that I think are going to be going in the ground. So grow it and sell it. I think if you can find a reasonable new crop bid, because we're concerned about the supply that's coming if we have a good growing season.
Yeah, like a lot of times growers, when they talk about forward contract and they say, I don't know what kind of yield they're going to have, so I don't want to have to buy back some of that contract. I get that in Durham, right? It's in the desert areas of the prairies. You can have a disaster in some of those Durham growing areas. But oats, are they really grown in those more arid areas of the prairie? Like, do we have production concerns that are that high? Because I think we need to be very aggressive in our oat marketing because of how many acres potentially are going to be out there. And who knows what happens with demand, especially with COVID-19.
Yeah, no, I think that's a good point, and you're right. Well, first of all, every individual and farm is going to have their different risk tolerance for how aggressively they forward sell, but that's also going to vary by crop. So things like durum or flax or large green lentils, you get on the wrong side of the quality or the yield or the crop, and it explodes higher. But oats, that same risk isn't there. So a person should be, and again, every individual is going to have a different stomach for that, but certainly it's one where you should be able to forward sell quite a bit more aggressively, and it just doesn't have that same risk that some other crops do. Okay.
So is there a sleeper here right now? Like Viren asked the question at the top, which one is going to be the least worst? But I want to finish off with positivity. Is there a sleeper here that we should be watching?
Oh man, sleeper. Well, on the one hand, I guess you could say pulses, but they're not that much of a sleeper anymore because we've seen those old crop prices pop and new crop prices have already been moving higher. So I guess it's hard to call that a sleeper anymore. It's like picking the guy in your draft who's a sleeper and he's already been appointed game player for a year. It's not really a sleeper anymore. But I think the one market I guess we're just keeping an eye on a little bit is wheat, and I'm a little cautious to say that in the sense that as soon as you have a couple weeks of good weather and you kill the crop and all of a sudden it rains and you have a huge yield, but there's an element of wheat, both genuinely some weather concerns, but it is one of those where I think attitude and sentiment is shifting a little bit in the sense where in the past countries and importers were comfortable going hand to mouth because the world was awash in wheat and it was easy to buy it and it was easy to buy it cheap. And now all that sentiment is changing a little bit. And so I wonder if rather than, kind of going hand to mouth, there's a little more element of making sure we got coverage. And so even if, we maybe don't have a raging weather market, if there's a little more of a bid maybe in wheat than in the past, it was more just, kind of passing those tenders, go hand to mouth. And so I think some of that sentiment shift in some of these areas as well, maybe a little more volatile, domestically in terms of their politics and just some of their internal dynamics. At the end of the day, if you keep people fed, that helps. And I wonder if in this current environment, some sentiment is shifted around wheat. And so, again, does that make you a raging bull if we get great weather? No, perhaps not. But I think some of that has shifted in that market compared to what we've been seeing the last while.
Here's what I wonder from a sleeper is, and if we're going to put the fundamentals out the door, I really wonder if one of the sleepers here is not technical buying, technical bounce backs, which allow opportunities for growers to take advantage of some of those. The price may not hold at those levels, but at least it gives them an opportunity to manage some of that risk. I think we saw that in hogs a couple days ago where, hey, why are hogs up? Well, one of the answers is that it's sort of a technical bounce back. So is that, do you agree with that kind of sentiment?
Oh, and I think you make a great point there, Sean. And I think even when you look through stretches about, and I think so you think about it from a farmer perspective, you don't need the price to be great every single day. What you need is a handful of those good selling opportunities over the course of the year. And even when you look at markets that are kind of, low and disappointing, inevitably you sort of have some counter trend rallies, you get some bounces, you get someone who's caught a little short. It might be just a local buyer. It might be the market in general. And the other thing too is in these markets, I mean, this carry in the market is just such a gift, and most of these crops have carries into those new crop months. Often you get that inverse between, say, the July and the November. You got carry into those new crop months. Anyone who's got a hedge account, well, you sell into that carry, you capture that carry, you wait for a local basis opportunity. It's a little more work. It requires maybe understanding how to use a hedge account, but it's not super risky or super complicated. And boy, that carry, if you can find a way to take advantage of that in your business, I mean, that is just your best friend, and that's like free money. So it's not free money. That's not quite true. You got to be able to store the crop and navigate that, but it really is a gift. You look. Even for example, in canola, the difference between the May and the November is, $13 a ton just right now today, for example, and all these crops are showing carry. So you take advantage of a rally, you sell into some carry, you back into those two pieces compared to, say, what the spot price might be in any given day. Huge difference.
Hey, great advice, John. I really appreciate it. We've been talking to John Driedger of LeftField Commodity Research based out of Winnipeg. Hey, John, if somebody's interested, how do they get a hold of you and the team at LeftField?
Geez, you can follow us on Twitter. Also, just our website, leftfieldcr.com. But yeah, both myself and Chuck are on Twitter. Look us up, DM us, shoot us an email, text. All our digits are on the website. So happy to chat and bounce ideas around. And be happy to chat with anybody.
Because you put in an oilseed report, pulse crops, and cereals?
And yeah, that's correct. Yeah, we got three letters we put on a regular basis. We engage with our clients in a bunch of different ways, but we got the 3 separate letters that we put out for anyone who's interested in those crops or trading those markets if you're a trader.
Okay. Hey, awesome stuff. John Driedger, LeftField Commodity Research. John, we'll talk to you again soon. Thanks to everybody that put in their questions for RealAg Live today. Tuesday's guest is going to be JP Gervais, Chief Economist with Farm Credit Canada. I'm sure the dollar question will come up again when we talk to JP. Everybody have a great day. Stay safe out there, and good luck to everybody that's starting seeding and planting. And make sure you tune in to RealAg Radio today at 4:30 Eastern, 2:30 Mountain on Rural Radio 147. Cheers, everybody.